Hey investors, Dave Hathaway. Welcome back to the channel where we discuss real estate investing and building wealth. Today is a special episode because I want to reveal what I believe to be a huge bubble or freight train coming for new construction properties, and why I think that investors and regular homeowners have this massive opportunity to purchase new construction properties at a discount, and how I also think that builders are just stuck in a rock and in a hard place just because they got too greedy over the past 2-3 years. Over COVID, when there was a very small inventory and property prices, which increased and have continued to stay high, builders were receiving a massive premium on these properties and they were making tons of money. Builders like Toll Brothers and Syntex and also smaller builders were just building a ton of houses. And I'm going to give you a tease of what I'm going to show you here. We're going to deep dive into the statistics that if you've watched this channel, you know we don't just like to go on gut feel, but we're going to look at statistics of different markets and how you can find these markets to determine if they're going to have a lot of new construction properties that come out of the market that are discounted that you can purchase at the same price of existing properties or less. And one of the first things I want to show you, it's how builders they don't get it. They don't realize that this is coming, that this is going to hit them. And you can see this first property in Myrtle Beach. It's a property that's been on the market for 3 months and they only discounted it $100. It just kind of shows kind of the laughability of like, hey, if you're not going to get an offer, lowering it $100 is not going to do anything for you. But then moving on, it goes to show this builder has 25 of these properties available to purchase. So it shows that, hey, not only are they not getting it, but they're not changing anything in some of these markets. In some markets, they are massively discounting properties. Next, I wanted to show you in this Myrtle Beach market, and we're going to go over a bunch of different markets in the statistics so you'll be able to see where I'm seeing these things in real time. This shows you that the builders are actually trying to game the system a little bit, and it shows you the price changes and in this particular property that's a beautiful property that I think anybody would want to live in, was listed for $404, and you can see all their like price changes where they went up a little bit, then they went down to $399, then they went down to $389, then they went back up to $399, then they went back to $389, and that's where they are right now. Builders can't massively discount their properties right off the bat. Or they can, but they have to do it in sneaky ways, kind of hiding ways. So if a builder all of a sudden sells, let's say this property for $350, it creates a comparable in their neighborhood that, for instance, they have 25 other properties that might not appraise if this one sells for $350. So that's when I say that builders are stuck in this rock and a hard place when prices start to fall or demand just drops out. So if they did sell for $350, the other houses, they would either have to have cash buyers, people would have to put down more money, which I don't think most Americans have. And it creates this kind of headwind where they would have to sell maybe one for a higher price to get a higher comp. So they're stuck in this game. And a lot of times what you don't see in these price changes, this is the sneaky or hiding way that they can sell their property for less if there's not a market for this property at $389, is they'll do massive discounts in the form of commissions, in the form of rate buy down. So often you'll see, and I've seen this in several listings, where the new construction property will buy your rate down to 5.5 or less. So that is a big expense for them. So their house is actually not worth the $389 that it might be selling for if, for instance, there is a seller's concession of $20,000. And I've seen seller concession from $12,000 on a lot of them. And I'll show you this next one that kind of shows you that. And this is another just new construction in Lubbock, Texas, that we're gonna go into this market. But this shows you the $12,000 flex cash. And that could probably be either used for rate buy down or just for closing costs that the buyer will have to pay. So in essence, the house, often when you see these new construction properties that are selling for the same price they were 6 months ago, it just means that they have massive seller concessions. So they're trying to prop up their prices even though the market is not giving them that price, or it's not worth that, because stuff is expensive. Interest rates are still high. And you can start to see cracks where I look at this other property in Lubbock, Texas market, which we have done a deal day video on it, where each week we look at a new property in a new market to determine if the properties make sense as an investment property. If you want to check those videos out, check them out over here at this playlist. But for this property in Lubbock, Texas, when we go down, we look at the price changes, we can see, hey, they started back in April of 2023 at $315,000, and now they're down to $290,000. So this is 4 months later, they're down to $290,000. And this is not the only market. So some builders are actually saying, hey, we're not getting the prices that we want, and we have to offload our inventory. And the other thing is, if builders have a massive inventory, they are having to pay holding costs for those properties. They had to pay for the construction. They had to pay for the land prep. They had to pay for all those things. So they're paying an interest rate on their new build houses. So they have a cost too. It's not like they just get to hold these properties for free. And this is another property in Columbia, South Carolina, a market that I like. And this property was listed for $246,000. And then 15 days later, they dropped it $10,000. So they see that the market's just not there, and they're dropping pretty much right away. So that tells me that either they're not getting any showings, they're not getting any offers, or both. Worst case scenario. The other thing I want to discuss right before we dive into the statistics and dive into how you find these markets and what statistics you should be looking at, there is a massive amount of people that aren't selling their property right now because they have 2 3/4 interest rates. And if they come off the sideline, and let's say interest rates do drop, and interest rates do drop into the 5s, and maybe a bunch of these people put their houses on the market, that is going to further affect new construction properties, because now you're going to have these properties that sell at a discount to the new construction properties. They're going to be competing with a bigger inventory that's going to cause them even more issues. And that's to say that the demand will be there, or people can afford these new construction properties. If you're interested in having me interview an agent that negotiates with new construction builders, let me know in the comments, and I can do that in a different video. We're not going to go into negotiation strategies for new construction properties and how you can get them even more discounted. Let me know in the comments if that would be something you'd be interested in. So let's dive into the statistics. All right, the first article I want to look at is this Redfin article that says that new construction properties or new builds are taking up 31% of all homes sold. And the reason that's important is that when anything gets too far to one side or the other, you have to say, is this a problem? And if you look at this graph here, you can see that normally new construction properties make up about 15% of the market, or 15% of sold properties. So when they double, you got to say, is there an issue here? And this one statistic doesn't mean everything. We'll start to see that we're going to stack a bunch of these statistics to go, is there going to be an issue here? The next thing that I want to show is a CNBC article that says refinances are up 15%. And this is year over year. So a year ago, which we were in the same market conditions, refinances are up 15%, which is just interesting. You would think that refinances, and I guess the thesis there is that people had higher interest rates, they purchased their property with a little bit higher interest rate, and now they're refinancing their property to lock in a 1 or 2% lower interest rate, because interest rates did go up to about 8.5%. So, and now they're around 6.5%. The second big thing that I highlighted in that sentence is that applications for mortgages, so people purchasing a property, are down 12%. Basically talking about supply and demand. And that's what we're going to be discussing this entire video on statistics. But again, if things are out of the normal, why are they out of the normal? And if there's a shortage of properties and that's what's driving the price, then you would have the same amount of demand of people wanting to buy properties. So it's just interesting to see. Again, these stats don't say anything in particular about, having a massive discount for new construction properties, but we're putting all this data together. Basically, what this is saying is demand is down. It's down 12%. The next thing we're going to look at is just a chart of the 30-year fixed average interest rate. So this shows all the way back to 1970, I believe. And you can see that it spiked up to above 17% back in 1982, 83, and then it's just steadily declined all the way down to about 2021, and then it spiked up recently with COVID and the pandemic, and it went up to about 8.25, 8.5, and now it's back down to 6.66 as of January. And that last leg down, or where it's decreased, is since November. So all the way in November and December, the interest rate has decreased. So 2 out of the last 3 months. So you would assume, and if 2 out of the last 3 months with that last data point, mortgage applications are down, you would assume if the interest rate's going down, you're going to see mortgage applications uptick or at least be steady, not drop 12%. So it's just interesting right here. But again, points to the fact that the demand is not there for expensive houses. It's falling off. Now I just want to share some stats from Realtor.com. Realtor.com has some amazing graphs, but you can kind of see the difference of pre-pandemic and post-pandemic or during pandemic. And in this first graph, it shows the active listing count. And you can see for the years 2017, 2018, 2019, you can see how many properties were listed for sale. That was pre-pandemic. And then you can see that the 2020, it drops off. 2021 drops way off and it's super down. 2022, it's starting to come back. 2023, it's starting to come back. So more listings are coming on again, more of a healthy market. The next graph shows total listing count. And again, we're having a year over year increase. So in December, we're having 3.6% increase from last year. So we're getting more properties that are coming on the market. But you can still see that that total listing count is really far away from back where it was pre-pandemic. The next graph shows pending listing count, pending sales, and you can see that we are kind of normalized back to where we were in 2016, 2017, 2018, and you can see that 2023 we're right about the same pace. So the odd liars that you can totally see in this one are 2020, 2021 is just a massive amount of purchases. So again, it's showing that, we're back to a normal market. It's not off right now. And the next graph is newly listed homes. And this one shows you that we are still down. It's much lower than the previous market. And it looks like in 2022 was the worst newly listed houses. But 2023, there's just not a lot of people listing their properties. And again, this goes back to the people have their amazing interest rate of 2.5, 2.75. And I don't know if they're coming off the sidelines. I don't know if they're going to list their properties. I mean, they might just hold on to those properties, list them as rentals, or just stay in place until interest rates, if they ever do come back into the threes, which they might never come back. That was, an era of artificial stimulus, and we just don't know if that's going to come back. So you just want to be wary of that. And then this one is days on market. So this one, we're actually getting worse for days on market than 2022. And when it says 61 days, it basically means that if you listed your property on average in the US, your property is going to sell in 61 days. And this is 4 days worse than it was in 2022. So this is showing that the market is getting worse. And this shows you the median list price. And this shows you how expensive we have gotten from the 2017, 2018, 2019 compared to 2022, 2023, you can see there is a massive differential that we used to be around 300,000 for a median list price around the United States. And now we are in between 400 and 420 in the last 2 years. So even though interest rates are super high, list price have not come back down to normal. So this is just, you can see that it's odd that it's not really making too much sense, as affordability is still a big problem in a lot of markets. Now I actually want to show you the real stats and how you find the areas where there might be big time issues, might be cracks, might be massively discounted new construction properties. And I am by no means a specialist in all these markets. I've analyzed each one of these markets, but if you're local and you know the new construction is in a big issue, or new construction's great and people are scooping them up, I'd love you to leave comments and you're finding value in this video. Also love it if you subscribe to the channel, like the channel, because this helps the channel grow, but it also helps us reach more people and grow in a bigger network so we all can help each other become better investors and build wealth. So the first thing that came to my mind and why I started digging a lot deeper, I was going to invest in a real estate syndication in Lubbock, Texas. And you might not know where that is, but it is a growing market. And that real estate syndication operator was purchasing new construction homes and doing a build to rent strategy. What that means is they were renting out all of the new construction homes, not selling them. And my concern was, hey, I want to see how these homes are going to stack up. I want to analyze, see what they're worth, if they're going to make money in the future, and just look at the different market dynamics. And the biggest thing that I pulled up, threw up some red flags for me immediately, and then I'm going to share with you in these different major markets, is building permits, new construction building permits. So when I looked at Lubbock, Texas, it looked like the average amount of building permits that were pulled in Lubbock was about 1,000 permits a year. And that was just like on average. But in 2020, 2021, 2022, and this is why I say builders got really greedy, it looked like the average was 2,400, which is a huge 140% increase in building permits. And that's fine if you have a massive influx of population and people moving to the area. Where it's not fine is if you have a slow population growth, or worse, even population decline, and you're still having a massive amount of new construction properties built. So this is what kind of pushed me to start diving into all these major markets. And I was looking at new construction properties and seeing them, a lot of them have this like shadow ghost inventory, where the builder will only list like 5 or 6 properties. And they do that for a particular reason. The builder doesn't want to have 50 properties listed on the market, because then they are not utilizing supply and demand to their favor. They're basically utilizing a marketing strategy saying, hey, we only have 3 properties available right now. And it's a smart thing for them to do. But this is just something that we want to uncover. We want to reveal to you guys that there is opportunity here. They're the ones that should be negotiating with you and being like, hey, we really need to get these properties off the market. And this is where the opportunity comes. They got a little bit too greedy. Now it's time for real estate investors to come in, and there's that opportunity to make money, or for homeowners to make, a good long-term purchase for themselves. So when you look at population growth of Lubbock, Texas, the population growth is 1.21% annually. That's decent, but by no means one of the fastest growing markets. So it just concerns me a little bit that you just have this massive uptick in building permits, but you don't have a massive uptick in population. And we're going to look at the next major market, which was Columbia, South Carolina, which is a market that I like. And their average building permits was about 400 building permits per year. And then they bumped up to 575 over the past couple of years on average. And that's a 69% increase in building permits for new construction buildings. So just, again, a big increase. And it looked like their population growth is around 1.46%. That's actually pretty good. As you see, we're going to discuss kind of some different major markets. I would think that 69% increase in building permits, it starts to raise red flags that there could be massive opportunities there. If you look at a major market, major, as in Houston, Texas, and Houston is in a lot of different articles is the fastest growing real estate market, and their building permits were about 4,000 on average a year, and now they're bumped up to 6,000. That's a 50% increase. So with a massive growing market, that's probably fine because they're such a desired market, but they're growing at a 1.42% population rate. And then we look at another market that I talk about quite frequently, which is Baltimore. You see, Baltimore's new construction permits on average before were 600, and now they're 600. So it's a 0% increase, and Baltimore's population is growing 0.64%, so slower than the other markets. But I actually don't think you'll be able to find a deal here because you don't have this massive amount of new construction inventory that's coming on the market. So different markets are going to behave differently. And I think that builders did get just really greedy in certain markets, and I think they're going to pay for it. Now we'll look at Myrtle Beach. And Myrtle Beach, which is one of the biggest growing markets, it looks like they have average of 500 building permits a year. And then more recently, they bumped up a lot to 950 building permits. So almost doubling, a 90% increase in building permits. That is a ton. You have to have a big population growth to support that. And so their population growth is 2.74%. And I believe they might be one of the top three, if not the top one of biggest population growth in Myrtle Beach. So they actually might be able to support that because they have such a high population growth that's going there. But again, you just want to be weary of these markets that a 90% increase is a ton more, and that these are kind of outliers. If we look at another major market, Detroit, Michigan, similar to Baltimore, 600 building permits on average. And then over the last couple of years, they still have 600 building permits, a 0% increase, and they just have a steady population. So I think in that market, you're not going to be able to find discounts on new construction properties. Those are going to sell at a premium because there's not a ton. When you have this huge increase, it's going to lower those new construction or those new builds closer to existing home prices. And if there's too much pain for the builder, they're going to have to sell them at a discount because they're just going to have to get them off their books. Next market is Atlanta, Georgia. And it looks like they've had on average since 2014, 3,000 building permits. And then it looks like in the last couple of years, they bumped up to 3,700. So a 23% increase. This is a much healthier increase. I don't think you're going to be able to find massive opportunities in places like Atlanta where there's not this huge increase in building permits. I think they're going to sell for a premium. Population increase in Atlanta is 100,000 people per year. So that's the Atlanta metropolitan area. That's a ton of people coming in. People are going to scoop up that demand, and that's a desirable market. Also don't want to not discuss where I live, my hometown, and where probably a lot of viewers are from, which is Washington, D.C. or the Northern Virginia area. And on average, that Washington, D.C. area, Northern Virginia area, they had about 2,000 building permits per year on average. And then over the past couple years, it's bumped up to 2,400 building permits, a 20% increase. And in the Washington, D.C. area, it's a population growth of 1% a year. So I don't think if you're from around D.C., you know that new construction properties sell for a ridiculous price around here, $800,000, $900,000, 1.5 million. I just don't think there's going to be any discounts because there's not this massive increase in inventory. When you look at a bunch of the building permits, and this is a huge trend that I've seen that you can see in 2008, before 2008, like 2006, that was the height of building permits. And there was a ton of building permits, and then it makes sense. The financial crisis happened in 2008, and building permits dropped off a cliff. But what I find interesting is that now you see very similar we're up to a similar rate of new construction properties in a lot of these markets, or just at the highest point that they've seen. And if you look at a bunch of markets, it's very similar. 2006, very height, drops down in 2008 to almost nothing, and then we're back up to where 2008's inventory was. To kind of sum that up with all those things, to find areas that there could be a massive discount in new construction properties, I think you need to look at building permits, and I also think you need to look at population growth. Or you can watch our deal day videos if we have one on that market to kind of look at the macroeconomics of the market to see if it's growing or if it's shrinking. If you have this massive increase of inventory, but kind of, again, a low level population growth or a no level population growth, then you could have massive opportunity there. Now I want to tie this back together with all the stats that I've thrown out with you. And thank you guys for sticking with us through all those stats. I know that was a lot of stats. It was a lot of stats for me to dig up. It was very fun to look at those different major markets. So again, I think the biggest takeaways are that demand is not really there right now. Demand has come down. So they're having to lower interest rates. And the Fed has told us that they're going to lower interest rates 3 times in 2024. So that means that we are most likely going to see somewhere in a 5% interest rate for a 30-year fixed mortgage. It might even get into the high 4s, but I'm thinking it's going to be somewhere in the 5s. And I think that that is an okay estimation of where it will be. So if we don't have demand, people aren't applying for mortgages, but we're having all these new construction properties now come on the market. And even if we do start to have demand, is that going to be because the Fed lowers interest rates and then all these people that were on the sidelines that weren't selling their houses then push their houses for sale or put their houses up for sale? So now new construction's competing with existing home sales. Is that going to cause them massive amounts of pain? I actually am looking at some new construction to just purchase and turn into rentals right now. The numbers work on some of the markets. What do you guys think? Do you guys think I'm way off, that new construction property is never going to be affordable? It's always going to sell at a premium? What are you seeing in your markets? Do you think all the stats that I threw out are ridiculous and that new construction is going to be way expensive and always expensive? And what do you think about those homeowners that haven't listed their properties? Are they going to hold on to them forever because they have this 2.5% interest rate that we're never going to get back to? Or are they just going to refinance out their properties with that uptick in refinances that we talked at the start of the video? And are they going to purchase properties with that refinance? What is it going to be? Also love it if you subscribe to the channel, like the channel, because this helps the channel grow, but it also helps us reach more people. Thanks for watching the video. I'll see you in another educational episode.